higher. This is fantastic what we are seeing regarding the energy sector. Let's see if this is going to be long lasting, that's for sure. In order to weigh in the situation, I want to bring to the show my next guest this evening, Yousef Alshammari, Editor-in-Chief, C Markets. Good evening, Yousef, and thank you so much for joining us.
Good evening, Alexander. Thanks a lot for having me.
Yousef, as I was just saying, actually oil prices are rising today after OPEC Plus decided to move up discussions on whether to extend record production cuts to Saturday, indicating that some laggard countries may have agreed to align themselves with the deal. So I was wondering, since you're a major OPEC commentator, what are your expectations?
Well, I think already the market generally is optimistic about OPEC Plus meeting coming up on Saturday. As you can see, the prices have rallied to a very significant level, where Brent has exceeded $42 briefly, and WTI has, as you just mentioned, it rose by 5%, with narrowing spreads between the two grades. So of course, that's mainly due to the fact that OPEC is expected to keep the current cuts at 9.7 million barrels a day for at least 1 month to come. So that's running through the month of July. In addition, it's as you know, that Saudi Arabia and other GCC countries are already implementing more than 1 million barrels per day voluntary cuts. Demand recovery is being excellent, as now we can see. Demand level this month is about close to 80 million barrels per day, with expected that it's going to reach 85 million barrels per day in June, and it's expected that it will also continue to balance within the months of July. As you can see in China, demand is already almost back again to a pre-crisis level. In the United States, demand is at least 80% compared to before the crisis level, and also in the Eurozone, things are improving. So I would expect tomorrow we could see some good results from the meeting. I expect certainly the price will rally. However, there are some constraints regarding that, or the concerns I would call them, is the compliance. Currently, OPEC Plus compliance is 70%. Mexico is, according to the reports that I just read, that it may not contribute to the 9.7 cuts from July. So I'm just a bit concerned on how the compliance of the group will continue. Of course, certainly Iraq, Nigeria, and Kazakhstan have published that they will improve their compliance by July. So these are, I think, the things that we have to monitor. There is some possible returns of shale production, about 1 million barrels in July, and that's due to the price recovery that we have seen now with the crude oil trading more than $40. And I heard a statement from the CEO of Pioneer, which is a major shale oil producer in the US, who said that once WTI exceeded $40, they could expect a return of at least 1 million barrels within the next coming months.
I was wondering, do you believe that once again Saudi Arabia is going to take the major responsibility in terms of output cuts, and how's the situation within the Saudi kingdom?
Well, I believe that Saudi Arabia has done a fantastic job in terms of balancing the markets, in terms of taking the leading role of motivating the group members of delivering a very high compliance, and in terms of keeping the momentum within the OPEC Plus group. Of course, Saudi Arabia and Russia are co-chairing the OPEC Plus alliance, and I believe their role has been very important. There was a call just a week ago between Crown Prince of Saudi Arabia, Prince Mohammed bin Salman, and President Putin, which was very important towards reaching an agreement between the two countries, which we are going to see in the meeting on Saturday. On the other hand, I just would love, I think, that we need to see a better compliance coming from both within the OPEC, that includes Iraq, Nigeria, and from the OPEC Plus countries, that would include Brunei, And of course, even Russia has not even reached its 100% compliance yet.
Exactly, and this is a key point that I wanted to touch on. Do you believe the price war and the tensions between Russia and Saudi Arabia are already in the past? Because we saw what kind of impact they had on the energy market, and of course, as a consequence, the crude oil price suffered, and mostly the U.S. Shale oil companies.
Well, that's I always call it a market share competition because the fact that what we saw in March was resulted from an agreement. All parties didn't come to an agreement on curbing supplies because of the huge uncertainty on how much demand will be destroyed as a result of COVID-19 crisis. We've seen that. Saudi Arabia has increased its production in April. Russia increased its production. Other countries in the GCC. But I would just want to also emphasize something: the decline and the huge decline that we saw in prices back in March and April has stimulated the economy in a way that it's because crude oil was very cheap, so it stimulated demand. Because once you have commodities being sold at a very low price, then buyers would want to buy more of that particular commodity, especially with the economic the downturn that we saw beginning of the crude corona crisis earlier this year. However, I don't see any of that kind of market competition happening now, because we see the OPEC Plus alliance are achieving there is very good coherence now, and we can see some good agreements in terms of even the compliance and the required cuts being actually undertaken. Because just see, after that market competition, which we saw in March, the group met again in April, and then they announced a historic major cut or production adjustment deal. And even those who did not want to cut, like Russia, didn't agree to cut of 1 million barrels, and then they agreed to a 9.7 million barrels per day cut. Other countries that were not even in the group have joined to support that coalition, including Norway, which took an independent decision, and Canada, which have also led to some forced cuts as a result of low prices, and even in the United States.
In fact, I wanted to talk about the role of the U.S. So what do you expect from them? Because, of course, they also decreased production, that's for sure. We've been talking many times about them, that's for sure. So what are your expectations now that we do see a major jump of the crude oil price? Do you believe they're going to shift their tactics, or?
Well, I expect shale oil to come back. Of course, shut-ins has already peaked. I expect some shale to come back by maybe 500,000 barrels to 1 million within the next within Q3 of this year. However, I don't think shale oil will return to its pre-crisis level over the next 2 years. I think it will flatten in 2021 and 2022. And I also think that possibly we will not see prices jumping back again to $60 in order to maintain the current, possibly the market share that we are seeing currently in the markets.
Yousef, very last question. I was wondering, I was talking with many of my guests, and I was saying to all of them, wow, what a major jump for the crude oil price. And many of them were, Alex, hold on, because we don't know if this is going to be a long lasting. So I've heard many different opinions. So I was wondering, do you believe the worst for the crude oil and the energy sector as a whole is already over?
Certainly, because the crisis that happened in the oil market was very much associated with COVID-19. We've seen a major lockdown during the months of March, April, and that's the hardest thing that hit the oil markets. As long as currently we are emerging out of lockdown, especially at least in the major economies globally. If the aviation sector is still offline, but at least road transport sector is coming back on stream. If we don't have a second wave again this year, if things remain under control with social distancing measure that countries are taking into account, I believe the worst for the oil market is over. Provided that we don't see any escalation of COVID-19 crisis in 2020.
All right, thank you so much, Yousef Alshammari, Editor-in-Chief, C Markets. Have a great weekend, Yousef, and thank you so much for joining us today.
Always a pleasure, Alexander. Our weekend will